Hello, everybody. Hey, Jerome Powell spoke last week and interest rates went up. Boy. And we also had some unemployment numbers that were better than expected, and that caused rates to go up too as well. So in the last 40 years, I have not seen interest rates so difficult to predict as I'm seeing right now. And, to tell you where rates are headed and when they'll start to ease is just one of the hardest things that I have found to do in this kind of a market. I wanted to just show you quickly here um, what's going on with interest rates here. Last week, we saw interest rates going to 7.19, and actually today they're like 7.23. So they're definitely kind of on the upswing here. But how long that'll be, it's just really hard to predict. So one of the things that we didn't see coming this year was that the bank failures happened earlier in the spring, and that's caused quite a bit of um, strain on the markets as well. We see government spending is just way out of control. And I can't believe that we're into a mode where they're going to run out of money and have to shut down the government pretty soon unless a spending package is approved. Also, last in this week's meetings, the Federal Reserve didn't raise interest rates, but so they paused it. But Jerome Powell's comments were hawkish about keeping rates high during most of the year, with a possible 0.25% raise in interest rates in the Fed fund rates by the end of the year, and then maybe one more time next year. So basically, that's telling me that interest rates are going to stay somewhere in the high sixes, low sevens, probably during the rest of this year and maybe into next year before we start to see some reduction in interest rates. We still face some labor strikes for higher wages. Student loan repayments are starting next month, and rising oil prices all are inflationary and could keep interest rates at these levels. Ultimately, Jerome Powell wants to see a loosening labor market. He wants to see wages coming down. He wants to see more people unemployed, and he wants to see core inflation dropping and a resilient economy stumble, but we're not there yet. So next week, some things that could move the market is on Tuesday, we're going to see new home sales. We're going to see durable goods. We're going to see on Thursday initial job claims. And then the big news next week will be on Friday, which is the Federal Reserve's favorite measure of inflation, which is PCE, or in other words, personal consumption expenditures. And that'll be on Friday. The markets that factored in that inflation will rise probably due to oil, but we could see some progress with the core inflation rate. What we need to do, people, is to stop spending money and start saving more money. And then, as a country, we are headed into a recession. And when that happens, having money on hand is going to be very important. So let me know your thoughts there, what you think rates are going to do, when you think rates are going to come down, and hoping you have a great weekend. If you have any questions, don't hesitate to give me a call or DM me here. All right. Thanks so much.